All right, let's dive into this whole systematic investment plan thing, huh? You sent over some interesting stuff on this. Looks like someone's got some big goals in mind. We've got let's see, a transcript from the SIP Unplugged podcast and some insights from FundStory.in. Should be a good mix of practical tips and some deeper looks into what SIPs can really do.
And it's really interesting, both these sources kind of highlight how flexible SIPs can be, even going beyond the usual, the equity funds that most people think about.
Well, yeah, you hear SIP, you think stocks, but it's way more versatile than that. Both sources mention hybrid funds, which is like a blend of equity and debt. And FundStory.in even goes deeper, talks about debt fund SIPs. Honestly, that's a whole new world for a lot of people, myself included, probably.
Think of it this way. You're setting aside some money each month into like a recurring deposit. Feels safe, predictable, right?
Yes.
Now picture that same like disciplined approach, but with the potential for, higher returns and this is key, more control over your money. That's the beauty of a debt fund SIP.
So you're still investing regularly, but instead of a fixed deposit, your money's going into this diversified basket of fixed income instruments, bonds, government securities, that kind of thing. And that flexibility you mentioned, that's huge.
Absolutely.
Yeah.
With a traditional recurring deposit, you're often stuck locked in for a certain period, right? And if you need to change the amount or withdraw early, there are usually penalties involved. But with a debt fund SIP, you have options. You might have a lock-in for each installment, but you can typically adjust future contributions or even withdraw some, often with very small, even no penalties. Depends on the fund's rules, of course.
So it's less about like rigidly sticking to a strict plan and more about having the power to adjust as life changes, which, let's face it, is pretty much always, right?
Exactly. And this idea of, making your investments match up with your life, that's where things get really interesting, because both sources really highlight that a successful SEP isn't, just about picking the right fund. It's about knowing where you want to go.
It's like plotting a course on a map.
Yeah.
You wouldn't just start driving without knowing your destination, would you? You got to know where you're headed.
Exactly. And that's what SIP Unplugged really, really stressed, this whole idea of goal-oriented investing.
So whether it's buying a house or putting your kids through school or even just planning for a comfy retirement, having that clear financial goal gives your SIP strategy a purpose, right? It's not just money floating around. It's a tool to build the future you want.
And once you got that figured out, then you can really start thinking about strategies to reach those goals faster and more efficiently, right? That's where the real power of SIPs comes in. It's not just about setting aside a fixed amount every month. It's about making those investments work harder, work smarter for you.
And both of these sources kind of lay out, some really cool ways to do just that, right? Like supercharge your SIP, I guess you could say. SIP Unplugged really got me thinking about these ideas of SEP top up and step up, SIP.
Yeah, and they're actually pretty simple, even if the names sound kind of jargony, right? So let's start with the SIP top up, okay? Picture this. You've got your SIP going, it's doing its thing, growing your money. Then out of nowhere, bam, you get like a bonus at work. Maybe you inherit some money, or you finally sell that old, I don't know, comic book collection you've been holding on to.
Yeah, I like where this is going.
So instead of, that money just kind of disappearing into your everyday spending, a CP top up lets you take those wins and put them straight into your investments. Like you're giving your SIP a booster shot, right? And because you're adding to what you already have, you're really maximizing that compounding effect.
That's huge, right? Because we always think of compounding as this like slow and steady kind of thing, but with a top up, you can leverage those big wins, those windfalls, and really watch your money grow faster.
Exactly. Now, step up SIP, on the other hand, that's all about planning for that gradual long-term kind of growth. FundStory.in, they really highlight this as a good strategy, especially for younger investors, folks who they expect their income to go up over time.
So instead of just sticking with that same SIP amount, you're basically saying, hey, as my income goes up, so will my investment.
Exactly.
Yeah.
It's like, let's say you start with a comfortable SIA contribution, right? With a step up plan. You can set it up to automatically increase that amount, like maybe every year or every time you get a raise. It's like giving your SIP this built-in growth path, right?
Right.
And it actually kind of makes sense psychologically too, you know?
Because you're not trying to like jump up to some huge amount all at once.
Right, exactly. You're just gradually stepping it up, you know, as you have more financial breathing room, so to speak. Makes the whole thing a lot smoother, especially if you're just starting out and you don't want to feel overwhelmed.
Right. Yeah, it's like starting a workout routine, right? You don't go straight for the heaviest weights right away. You gotta build up to it, gradually increase as you get stronger. Makes sense, especially when you're thinking about the long game.
And that's where these strategies really come into play, right? They take this basic idea of a SIP and they make it so much more dynamic. You know, it's not just set it and forget it. It's a strategy that can actually like grow and change with you.
Which brings us right back to that big idea we keep seeing in both of these sources: flexibility. Whether it's choosing between equity funds, debt funds, or those hybrid funds, or topping up your SIP when you get a little windfall, or even just gradually stepping up those investments as your income grows. You're the one in the driver's seat, really.
Exactly, and that's a really empowering feeling to have. I think when it comes to your money, it's not about following some rigid set of rules. It's about really understanding your own goals, how much risk you're comfy with, and then using the flexibility that SIPs offer to kind of craft a strategy that really fits you, your own unique situation.
So we've gone from the nuts and bolts of what a SIP even is to uncovering some pretty interesting layers of strategy and control. Sounds like the big takeaway here from both SIP Unplugged and FundStory Lot In is that SIPs aren't just about diligently putting money away every month. It's bigger than that, right? They're more like a way to build a bridge to your financial goals, whatever those might be.
And that actually brings us to a final thought for you to kind of chew on as you continue to explore this whole world of investing, right? We've talked about all these different IP options, how adaptable they can be. So given all that, how can you see yourself using these tools, these strategies to really go after your own
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.